Hello and welcome, dear dividend investors. We take a look at AbbVie this time, and AbbVie is a really promising stock if you look at the bare fundamentals, and because of that, of high interest to many of our members here on Dividend Stocks Cash. And we take a deep dive into AbbVie to look if these promising metrics really hold true if you dig a little bit deeper, because there is some really interesting stuff regarding AbbVie. So let's go on. My name is Thorsten Tiet. I'm the founder of Dividend Stocks Cash, stock screener to help you finding promising investments. And this is AbbVie already. I increase the screen size here for you to see better what it's about. And AbbVie shines with really interesting fundamentals. Let's have a look. So you already know probably that it's a biotech company. I'm not going into too much detail here. Market capitalization about 144 billion US dollar, and this is of high interest. Current dividend yield 5.4%. Based on free cash flow, the payout ratio only about 55%. Increase of dividends since 7 years already. And look here about at the dividend increase rate. Yearly dividend increase within the last 5 years, 20% and 50% still for this year. And very stable dividends. This metric is specific to Dividend Stocks Cash of plus 0.97. 1 is the best, -1 would be the worst, and still the stability of earnings, operating cash flows, and revenues also rather high 0.7, and really high 0.85, and world class 0.98, including all these compound annual growth rates. So this really explains why AbbVie is a stock of high interest, and combined with the current high dividend yield, I already said 5.4%, and it was very rare that the dividend yield in the past was higher than it is now. Only within a short period in 2019 the period was higher than it is now. So very high dividend, and dividends are expected still to increase. So very soon they should reach 6% and even pass 6%, 6.3% in 2022, according to the analysts. So this makes the stock really very attractive, at least if you take a first look. And now we see, or we try to get an idea if this really holds true, and this is really such a promising stock, because there must be some caveats there must be something which makes investors think that the stock has some problems. And if you look at the valuation here, then you see the price chart of the stock. This is a black line here, and then we see that AbbVie within the last years was not a very good investment. Within 2016 the stock really got a bump, but right now we have capital losses within the last 2.5 years of about 20%. So what's the problem with AbbVie? The problem, both strength and weakness of AbbVie, is the dominant drug, the best-selling drug in the world. It's called Humira, and the problem is that the patents are running out very soon. It already ran out in Germany, for example, in 2018, and what happened is that other companies, 3 other companies, Amgen included Sandoz and Boehringer Ingelheim, they released their biosimilars, something similar to Generica, and within a single year AbbVie lost about 50% of the market share in Germany due to the new concurrence. and in 2023 it's estimated that AbbVie will lose patent in the United States, and in the United States AbbVie is responsible, or the United States are responsible for a little bit more than 70% of total sales, and that could mean that they will lose a lot of sales. And here you see, this is the Facts at Workstation, the total sales of AbbVie for the last business years, and here these are the most recent estimates of the analysts, and here you see all the drugs sold by AbbVie, and this is Humira, and you can see that AbbVie has a lot of different drugs they sell, but nothing comes close to the total sales of Humira, which is the world's best-selling drug in revenue. And revenues still increase, as you can see here, although Humira is was released in 2002 or 2003, depending on the market, so it's not a new drug, it's an old one, but revenues still increase till 22, and after 22 patents run out in the United States, most probably, and then you see here an estimated drop in sales, and this drop will continue in the next years, and sales will decrease from nearly 20 billion according to the estimates to about a third in 25, and probably will continue to drop in 26 ongoing. So that's the problem. And if you look at the other drugs, nothing comes close, and nothing can compensate the loss in sales of Humira. And loss in sales, of course, means loss in earnings, and maybe, if things completely go wrong, dividend cuts. We have these other drugs like Imbruvica, for example, which is the second best-selling drug of AbbVie, but it can't compensate the losses of Humira. So what can management do, and what is it really doing to solve this problem? Of course, they try to foster, to boost sales of our drugs, also of drugs not already mentioned here, still in testing phases. That's one solution approach. The other solution approach is to enter the competition, or to beat the new competition of biosimilars. For example, in the Netherlands, there was a price war because, like in Germany, patents run out, and AbbVie tried to keep their market share with a lot of discounts till 85%. So that's really a lot, just to keep the biosimilars off bay. Of course, this will also decrease considerably even the sales, and this should be rather a short-lived strategy. So that's not a real solution. Another more sustainable approach might be to acquire other drug makers, and this is exactly what happened in 2020. So just some months ago, in May, when AbbVie acquired Allergan for more than $60 billion. So they get new drugs immediately without waiting for the test phase, whose result is unknown. And I created a little Excel sheet to get you an idea about the sales, both still including the estimates, and how the sales, about the different segments of the sales. So you see here, this is the total sales, this top line here is the total sales of AbbVie, and starting from 2020, the business year 2020, we have the estimates here, and you see that Humira, the dark blue area, right now still, this is the last business year, we know 2019, Humira made more than 50 or about 50% of total sales, and total sales shall be flat for the next years till 22, what we've all just seen, and then they will decrease. And what's expected is that Allergan and the other drugs, this is the acquisition, that with the help of other drugs and Allergan, we can compensate the decrease of sales in Humira, but still total sales will be flat. And what we see right now is very untypical if we do fundamental analysis, that we have a company whose sales increase and then really get a boost for the next years, for the coming business years, for the next 1, 2, 3 coming business years, and then suddenly there is even a slight drop in sales. Normally this doesn't happen. It's a very specific situation because we already know that the sales of Humira will be lost, or will be lost, at least some of these sales. And this is exactly what we see here. I changed the layout. This is exactly what we see here. If you just look here, you see growing revenues, very stable growing revenues. Then the company even gets a boost. This is thanks to the acquisition of Allergan. And then suddenly here in the far future, in 23, we see even a slight decline both in margins, operating margins here, and in total sales. This is very, very uncommon. This doesn't happen very often, and this will have to take into account, and even the years further behind 23 onwards, because sales of Humira will still decrease, and there might be the problem. This is what investors are already seeing today, and this is why AbbVie has such a high dividend yield, and why the price, or why the stock looks so attractive. By the way, we can see here that this is the current state of the balance sheet, and we see here how AbbVie prepared for this acquisition. In 2018 we had this balance sheet. We had debts, for example, of about $68 billion, and in 2020 there was this acquisition. In 2019 was a period of preparation for this acquisition in 2020, which means they already increased their debt level. So they increased the debt and they had more cash then, about $40 billion. In 2018 it was still $8 billion, so about $32 billion more in cash to make this acquisition. And when they made this acquisition, you see that the goodwill, this area here, increased from 15.6 to $42.7 billion here, to about $27 billion, and the cash on the other hand decreased from 40 billion to 6 billion, so about $34 billion in cash was probably paid for the acquisition. And then some part of the acquisition was also financed by own shares, and you see here that the treasury stock, still worth $24.5 billion, decreased to sole $2 billion. So they AbbVie paid for Allergan using cash and own shares, and you can really see how management prepared for this acquisition if you look at the change of the structure of the most important balance sheets items here, and how they changed during the course of time here. So it's very interesting in my point of view, just to give you a better understanding. And now what's the question is, if you know all that about the coming challenges of AbbVie, if the stock is still an attractive buy, and to give you a better idea about the answer, let's look at the dynamic valuation, where we see the evolution of AbbVie by earnings per share matrix, reported earnings, adjusted earnings, operating cash flow, and even dividends. And I get rid of these here, and I show you now the calculation of the fair value, so the results here. Let's add all of them. We can make them on parallel. This is very useful because fair values are always an estimate only, and to know which fair value calculations are the most suited, it's a good idea to get them all on your screen and then to select these ones, or to keep these fair values which are the most realistic. So we see that the fair value calculated based on the reported earnings is a little bit bumpy, unreliable, so we get rid of them, this one, and the other ones I think we keep. Here are the average metrics. The stock was valued within this area here, starting from the inception of AbbVie back in 2013, when the spin-off from Abbott Laboratories happened. And what we can see here is that we have this peak. We can change logarithmic. It doesn't change very much. So this is a peak, 120 something US dollar, and you can see that the stock was clearly overvalued then. And then we had this phase of we had a correction phase here till August 2019, when the stock came back or lost till 66 US dollars, so a lot. And since then, or even a little bit earlier, the stock is undervalued. Right now the stock price is about 87 US dollar, this red dot here, and the current value of the stock is about 120 US dollar based on the last 4 quarters, so the most recent data we have. And we can also look at the estimates, and then we see fair values of about, for the current business here is here 130 US dollars, so very close. I will zoom in even a little bit more, you can see it better here. And then the fair values are even increasing because the cash flows, you can see it here, and the adjusted earnings, they both increase, dividends also. But then we have this phase of stagnation due to Humira, the Humira decline in sales, and we need to respect this. And I think that it would be too optimistic maybe to base the calculation on these multiples. To be more careful, we can either select lower fair values, so we have these different fair values here. We can choose something more prudent to calculate our expected yield, because basically I think the expected yield is a very important indicator to decide if a stock is interesting for you or not. Of course, very important for dividend investors if there is a pending dividend cut. For this, we could have a look here, especially at the free cash flow, and you see that dividends are still nicely covered according to the last 4 quarters. Then here we have a drop in free cash flow, but free cash flow is expected really to increase in the business years 21 and 22, and for 23 unfortunately we don't have estimates yet, but we can look at the evolution or at the slight decrease in operating cash flows and in earnings to get an idea that free cash flow will also decrease as well. But still, if we compare dividends then to our expected free cash flow here, there shouldn't be a problem with the payout ratio based on both earnings and free cash flow, if things hold true there. So dividends are, at least to me, not endangered, included 23, but if you want to calculate our total expected yield, including capital gains and dividends, then we can do it here. And to be a little bit careful, we don't use the dividend yield calculated with one of these fair values here. I would suggest this would be an annual yield of 25%, which is really high. But maybe something like here. So fair value of 122 US dollar instead of about 160 to even 180 US dollar. And then we still have an annual yield of 50.8%, which is really decent. 1/3 based on dividends and the rest based on expected capital gains. And I think this makes the stock still attractive, at least for this time range with this model. You could also alternatively try to get or to decrease, adjust the multiples to adjust the fair values. You could say that 90 is much too high. This we have skipped. We don't see this fair value, but this one we could say that the price earnings based on adjusted metrics should be 10 only, because right now we have 8.8, 8.7, and back in the past the price earnings were higher. So we could say we don't think that the valuation of the stock will exceed the current multiples of the stock till investors better have an idea if the declining Humira sales can be compensated, so the stock isn't worth more than 8.7, just to make a plausible valuation based on the adjusted earnings multiples and based on the price to cash flow. We have the exact same multiples, 8.7. So once more, let's get this. And the dividend, the required dividend is really at least 5%. And if we do that, we get a complete new valuation, fair value approach of the stock. And now it's much more realistic. And now let's check the expected yield once more, maybe now based on the adjusted earnings. And now we get 12.6%. So something between, I would say, 12 to 15% could be a realistic expectation of your yield if you buy or invest in the AbbVie stock. So, but then you buy the risk into your portfolio that the Humira sales, the losses in the Humira sales can't be compensated. And to respect this, I showed diversification could do the trick. So if you are attracted by this expected yield of somewhere between 12 to 15%, you might buy the stock as a dividend investor, and then don't put too many of these stocks into your portfolio, but that's a very common advice. So if things go wrong, and if things go wrong, then your portfolio won't be damaged too much. Okay, that was everything I wanted to say to you. Thanks for watching. I hope this was helpful to you. See you next time. Ciao.